Wonnell, I'm so excited to have you on the show. I don't know if everyone knows, but you're one of my very best friends in the whole world. And we've known each other a very long time. I don't even know. Probably been over 20 years. I don't even know.
17 years.
17 years.
Yeah.
Okay. A long time, basically.
A long time.
And we used to be, before I became a financial advisor, I was in the car business. I was a finance manager, and that's how we met. We were both working in the car business. And I know there's just so much kind of confusion out there when people go to buy a car. The process can seem daunting. Like people always feel like they don't know what they should know, or you and I, we've kind of seen it all, and you're definitely the expert. And so I just wanted to get you on here and ask you a whole bunch of questions.
Okay.
So first of all, before I even get started, is there anything that you want to say?
No, not really. I mean, it's the car business. I've been doing this car business all my life. I've been doing it about 20 years now. This would be actually my 20th year doing the car business. So I kind of, I've kind of seen it all. I've done it all. New cars, used cars, finance. So I'm pretty much well-rounded with everything, with all the questions you have. So you can get started.
And what are all the different brands you've worked at again?
So originally I started out selling Fords when I was 19 and a half, going in 20 years old. I've worked with Nissan for many years, Toyota. I've done Ford, Toyota, Nissan, Honda, and then just, recently the last few years, I've been with BMW.
So when people go to buy a car, what are some of the things that, in your opinion, they should know, they should research? Like, what should they do to be prepared when they go to buy a car?
Well, in today's age with the internet, most customers are well informed. But the main thing they need to do the research on, especially customers coming in, they really need to do extensive research on trade-ins. A lot of customers just go to Kelley Blue Book and they assume, you punch it in through Kelley's Blue Book, they get a value and they assume that that's going to be the value they're going to receive at the dealer. That's the biggest misconception, because what Kelley's Blue Book actually does is it's a guide, the guide to go by. So typically in the car business, you'll see customers come in and go, well, Kelley Blue Book says I'm supposed to get 12 grand. Well, that's just a guide to go by, because in today's market, the cars are ever changing. So it's changed by, what a dealer can sell or purchase a vehicle based on what the auction prices are. So, what I usually tell my clients and my referrals and things, I tell them to go by CarMax. CarMax is the easiest. They'll give them an appraisal. A lot of people don't like what CarMax has to say, but if you don't like what CarMax has to say, you're going to hate when you come to us, so that's one of the things. And that's just a good guideline, so you can get a real actual feel of what your vehicle is actually worth. A lot of people have the misconception that when they see a vehicle online, they'll say, okay, well, I seen this vehicle selling for $16,000. You guys are only giving me $10,000. Well, it's the difference between retail and trade-in. And that's probably one of the things that I would always urge anybody that's in the car market: do extensive research. If you're trading a vehicle, know exactly what your trade is valued at, and have a real value, not an inflated value.
Yeah. And okay, speaking of that, when someone comes and trades in a car, what are the different things you look at? And as the dealer, what are you looking at in terms of, hey, if I do take this car in at this price, what are the other costs associated that I'm going to have to pour into this car to get it ready for sale or auction or whatever?
Absolutely. So most customers don't realize that when you bring a vehicle to the dealership, everybody says, my car is in perfect condition. Well, it's in perfect condition for you, but it's not in perfect condition for the next buyer. So typically what happens is, one thing we look at is tires. Tires are very important. We want to make sure that they have a certain amount of tread. If your car is fairly new, that means we're going to have to CPO it. And what CPO means is certified pre-owned. That means that has to go through a whole and different cycle, and we're selling it with a certified warranty from the manufacturer. So what ends up happening is tires have to be at the tip-top condition at most part. And if it's not, we're going to replace the tires. Other than that, reconditioning, dents, dings, things that you may not even think is a big deal. You know, there might be a little dent or ding and you're like, oh, that's nothing. But guess what? That costs. So we have to take that in consideration. So, you know, reconditioning the inside. If you have stains, if your fabric or leather or interior is worn, we have to replace that. Well, not replace it, but we have to have a vendor come out and fix that. If you're a smoker in the car, we have to get the car de-smoked where the smoke smell isn't there. And then on top of that, regardless of how good your car is, we always have to run it through our service department. Now, what happens with the service department, what a lot of people don't understand is they think because we're a dealership, oh, you guys, you may get the stuff cheaper. You may get the service done cheaper, you know, because you're a dealer, but they're two separate businesses. There's service and there's sales. And service sells us just like we're a customer. So when we get a trade-in, we send every single car through service, no matter how good it is, it's going to get the oil change, it's going to get the inspection done, and that adds in the cost. So when you're coming to a dealer and you're thinking, hey, my car may be worth $10,000, it may be, you know, to an end buyer, but by the time we do everything we have to do to it, you know, if we gave you $10,000, now we own it for $12,000, and that defeats the purpose of selling the car to make a profit. So that's the reason why you see the discrepancy in trade-in values, because maybe we need to give you $8,500 because there's going to be $1,500 worth of work that's going to equal that $10,000. So that's kind of how that works there.
So my next question is, I think a lot of people have misconceptions about the interest rates they should get when they come and finance a car. Yes. Can you talk a little bit about the different types of interest rates, like the promotional interest rates, normal interest rates, and then also how interest rates change based on like the age of the car, if it's new or used, and also like the loan to value, like how much are you putting a down payment? Like how does that all affect interest rates?
Okay, so first things first is the misconception is online advertising, right? So people go online and they see, for instance, they'll see, okay, 0%. Let's talk about that. Domestic products. Domestic products, if you don't know, are American products, Ford, Chevy, Chrysler. Import products are going to be like your Nissans, Toyotas, anything that's imported into the country. So your domestic manufacturers always have the special interest rate of 0%, where you see customers come in and say, hey, you know, I want to get 0%, right? What they fail to realize is the 0% is only on brand new vehicles only, right? It does not apply to used vehicles. It also applies to certain vehicles. So not every vehicle qualifies for 0%, right? And then you also have to understand is that 0% is in lieu of any special rebates. So sometimes, for instance, right, when I was working at Ford, they would say, okay, we have a $4,000 rebate and we have 0%, right? What the consumer don't know is you have to pick and choose, right? So for instance, I would always tell my customers, if you're the type of customer that's going to pay your vehicle off early and you know that you're going to get a loan for, let's say, 5 years, but you know you're going to pay it off in 2 years, that may be the way you've always done your vehicles, then it always makes sense to take the $4,000 versus 0%, because now you're paying less principal. If you're the customer that's going to keep your vehicle until you pay it off the full 60 months, it's going to always make it better to take the 0%. So that's kind of how that happens with special rates. When you're dealing with, let's say, older vehicles, the older the vehicle, the higher the rate. Doesn't matter what your credit is, right? At this moment in time, right? So you can take a customer that has a 700 credit score, and you can take a customer that has a 500 credit score. We both know the interest rates are going to be different, but let's just say the customer with the 700 credit score is buying a very older car. Let's say you're going to buy a car for your child, and you're like, hey, you know, there's a 2005 BMW, you know, you want to get for your child. My credit's very good, right? There's only a couple banks that's going to finance a vehicle like that, you know, that's older. And those are going to be your secondary lenders. The secondary lenders are the people who extend credit and extend loans to people with challenged credit. So even though
or high risk type loans.
High risk, absolutely. Mm-hmm. So even though you have good credit, your interest rate is going to be really high on an older vehicle. And sometimes that's the misconception that I've seen over the years, because the customer will be like, well, I'm not going to pay that. You know, I just paid 3% on my car. Well, and I'll tell them, well, you know, your car is a 2019, your car is a 2020. This is a 2003. This is a 2004, 2005. So those are just some of those misconceptions. And when it comes down to rate, Rate is solely based on your credit. In that aspect of it, let's say we're talking about new now, where it's always important to keep your credit in good standing, because that's going to be the difference between a person coming in paying $375 for a car and a person paying $525. And the gaps even get bigger than that depending on the credit. So I don't know if that answered the question that you're looking for.
And I'm about to go into leasing, but before I go into leasing, I want to talk more about this loan to value thing, because a lot of people have negative equity. They don't understand what negative equity is. Mm-hmm. And I want to talk about that. Can you explain to everyone what is negative equity? How does that happen?
Okay.
Yeah, talk about that a little. And how does that affect the rate that you get?
So negative equity is what we call the black cloud in the car business. We say it's the black cloud, right? You can never get away from it. It follows you everywhere, right? So I would say this, right? Everybody that comes into the dealership always says, I don't want to have negative equity. I don't want to have negative equity. I don't want to have negative equity, okay? Unless you put a large amount of money down on the car or you double up on your payments, you are going to be in a negative equity situation. No way, no buts about it. Now, the key is, are you going to be in a negative equity situation where your negative equity is $1,000 to $2,000, or your negative equity could be $5,000 to $10,000? And I've seen in cases where people are in negative equity situations where in the vicinity of $15,000 to $20,000. So what negative equity is when you owe more on the car than what the car is worth. And this is going to always happen, where people always try to beat the system and say, I don't want negative equity. I don't want negative equity. It's going to happen because the cars depreciate. They depreciate at an alarming rate. So it doesn't matter if you're buying a BMW, doesn't matter if you're buying a Mercedes, doesn't matter if you're buying a Honda, a Nissan, and the big thing now is people are like, oh, get a Honda. They retain their value. They do better than some cars, but they all lose value.
It's still a car, yeah.
So for instance, negative equity, to give an example, is let's say you went out and you bought a car, a $30,000 car, and you're going to finance that car for 60 months. You still have to pay interest on the car. So some portion of your monthly payment is going to go to interest. Some portion is going to go to the principal balance of the loan. Now, as you're paying this, your car is decreasing in value every single day. So it doesn't matter if you keep it in tip-top condition. It doesn't matter if you go home and you park it in the garage and you guys go to Europe for the next 2 years and leave it in the garage, your car still depreciates. So what ends up happening is, let's say after 3 years, and I'm just using an example here, don't quote me on these numbers, but after 3 years on a $30,000 loan, you may owe somewhere around $18,000, $19,000, right? Let's say $20,000, depending on what the interest rate is. But now your car is only worth about $15,000. So if you owe $19,000 and your car is worth $15,000, you have a $4,000 negative discrepancy, right? So when you come to the dealership, they're going to appraise your vehicle and they're going to say, okay, Angela, your vehicle is only worth $15,000. They're going to say, how much do you owe on the vehicle? You're going to say, well, the loan balance to pay it off is $19,000. So you got $4,000 negative equity. Now, this is a situation where we ask you as a dealer, how much cash do you have down, right? Because that $4,000 has to go somewhere. So it's typically either paid up front by the customer through down payment, or it's rolled into the new car that they're currently buying. Because most people, they come to the dealership, they don't want to put any money down, or they want to put as little as possible down. So customer says, well, listen, I don't have $4,000 to put down. I only have $1,000 to put down. Okay, great. Well, the $3,000 is going to get rolled into your new car loan. Now, that $3,000, when you're purchasing a vehicle, every $1,000 determines $20 in payments, right? So now you just tacked on $60 in payments, right? So now a vehicle that was originally costing $400 is now costing $460, right? And the main issue for the reason of negative equity is most people trade out of their car too soon. They buy a car now, right? So let's say this, I tell customers this all the time. No matter how much money you got, no matter what your financial situation or your credit situation is, everybody that purchased a car or lease a car, they do it based on what their current lifestyle is right now. So I got 2 kids, or I have no kids, or I always wanted this and I never made enough money to get it. Now I really want it. And so everybody does it based on what's going on today. They never think about what's going on tomorrow, and tomorrow being in 3 years from now. So most people, the number one reason that people come in to the dealership to trade the vehicles because their situation changes. I got this convertible Mustang, right? But now my wife had twins, right? So you can't drive the convertible Mustang. So now you're 3 years into a loan, and you're going to have massive negative equity. So you have to figure out what you're going to do with that. And so what ends up happening is every 3 years, you're tacking on more and more and more and more negative equity, which would probably be a great segue into why I think leasing is the best option.
You and I, we're both huge fans. And what's crazy about it is that so many times people are like, I don't want to lease, I want to own the car.
Yes.
I don't want to lease. And I know we've both heard that so much. And I'm not saying everyone should lease. I actually, this, and we probably might disagree on this, but I think people, for the most part, should buy a pre-owned vehicle after it's had most of its depreciation, pay cash, and keep it till the wheels fall off. I think that's like the most financially prudent thing to do. But if you're one of those people that knows you want a new car, or you want to have you don't want to have any issues with breakdowns or warranty or like maintenance, repairs, whatever, and you're like, I have to have a new car, then I am a huge fan of leasing. And I just feel like so many people don't really understand leasing. They don't understand all the cool options available with leasing. And I know that you're just as passionate about leasing as I am. So talk to us a little bit about what is a lease, why do you recommend it? And then talk to us about the different options, like the one pay and all that different stuff. So and also explain the interest rate, like an interest rate versus a lease factor.
Got you. So as you know, I'm a big fan of leasing. I wasn't at first. The one thing that I typically tell people, and you're absolutely right. Let's start there. Angela's absolutely right. If you buy an older model, late model car, and whether you have the money to pay cash, that's the actual best thing to do. Pay cash for it and drive it till the wheels fall off. But let's assume that you finance it. You finance an older model car, and you keep it to after the 60-month term or the 72-month term, and you drive it 3 to 4 years afterwards. That's the best option. Hands down, that's the best option. In today's society, there's a small percentage of people that's going to stay in their car that long. There's a small percentage of people that will actually show up to the dealership with the title to the car, right? So that comes into me being a fan of leasing. The reason is the misconception, like you said before, Angela, is everybody says, I want to own my car. I want to own it. And it's the misconception of leasing an apartment versus buying a house, right? So when they hear the word lease, they automatically associate that with, oh, I'm leasing. So it's like leasing an apartment versus buying a house. Well, the thing that I tell people is that when you buy a car and you don't pay for it cash, you don't own that car, right? You don't have a title. And if you miss 4 payments in a row, they will come and pick that car up. So you have no ownership to that car, so that's the first thing I would tell customers. And for my really hardcore customers, I kind of explain it to them like this, especially when people are talking about purchasing a house and leasing an apartment. I always tell them, if I was going to sell you a house, right? And the typical mortgage for, I would say the average mortgage time for most people are like, they finance, I think is it 30 years or 15 years or what is it? It's typically like 30 years they do.
For a house, 30 years.
Yeah, 30 years. So that's typically, right? So most customers typically, the average customer, right? You're going to buy a house, right? I'm going to sell you a $400,000 house, right? And we're sitting at a closing table and I say, Angela, you're going to finance this $400,000 house for 30 years. But I just want you to know in 15 years, this house is only going to be worth $200,000. Would you buy it?
No.
So why are you out here buying cars? And I ask people that all day long, why are you out here buying cars? If you bought a house for $400,000 and in 15 years, that house is only going to be worth $200,000, you wouldn't buy it. And I'm not calling anybody a fool, but only a fool will buy a house that's only going to depreciate. You follow what I mean? So I kind of say this to customers in a joking way. I say, well, why are you buying these cars? Especially when we're talking about a $40,000, $50,000, $60,000, $80,000, $100,000 car that in 3 years is only going to be worth half the value, right?
Right.
So why would you do it, right? So that's the biggest thing that attracted me to leasing. For me on my side was when I started looking at my own personal situation is I'm in the car business. There's a lot of ups and downs in the car business. Sometimes I'm making stupid money and sometimes I'm making stupid money that don't make sense for me to be in the business. It just all depends, right? Sometimes I'm high, sometimes I'm low. So, for my situation it was the feeling of getting locked into a 60-month or 72-month term where I had no control over the outcome. So for instance, I always tell people when you're leasing a vehicle, you always have that 3-year checkpoint to reevaluate your situation. So a lot of customers that come into the dealership now, and the main thing we hear is they want to come in and they want to lower their payment. That's what everybody wants to do. You know what, Wonnell? I had this car. I was making this amount of money. This was going on. Or, now I'm going through a divorce, or now, this happened. I got sick, whatever the case may be, they're trying to lower their payment. And if you're in only the half cycle of that loan, it is impossible to lower your payment without a large amount of money cash down. And if you had the money to put down, you wouldn't be at the dealership trying to lower your payment. You follow what I mean? So that's the issue that I always run into with customers. So when you're leasing, it gives you that 3-year checkpoint where you can reevaluate your situation and say, okay, am I making the same amount of money? Do we have more kids? Are the kids going out the house? Or, am I driving from, Miami to West Palm Beach? Like, there's so many different reasons why people need to trade out of their car early. And with the lease, it gives you the option to reevaluate that situation. So that's kind of how it was for me. I always wanted a 3-year checkpoint because, I might buy a car based on the money I'm making this year. And you know what? A pandemic might happen. So, 3 years from now, I don't need this car, So those are some of the things. The other thing is not having to deal with the negative equity. Like we was talking about just a little while ago, is having negative equity in your car. When you're leasing a vehicle, you have the smallest risk, and all the risk is left on the manufacturer, right? So you're not going to have in 3 years, if you need to get out of that car, any negative equity, because there will be no negative equity, right? There's nothing else left to pay. You have the option where people say, I want to own my car. You have the option of buying your car after the lease, because guess what? Half of the car has already been paid off, so there's a couple of things, benefits of just being able to be in the lease. For instance, if you purchase a car and you get into an accident, you are bearing the depreciation of your vehicle now being in an accident. So when you're coming to a dealership and your vehicle's worth legitimately worth $15,000, because of that accident, it's probably only worth $13,000. And depending on how bad the accident is, let's say you had structural damage, that $15,000 now turns into $7,500. Because that's all I'm going to be able to get for at the auction. So now you have to bear that. With the lease, you don't have to bear that. With the lease, you have gap insurance that comes free where you don't have to buy. Gap insurance is if anytime you get in an accident and your vehicle is worth less than what you owe the bank, the gap insurance will come in and pay the gap difference, which is essentially the negative equity. You have free gap insurance. You don't have to worry about maintenance on your car, because most of the time, with most manufacturers, the maintenance is taken care of already. All right. You don't have to worry about repairs on your car because you're in a 3-year lease, and most of the warranty is for 3 years anyway. So essentially you're buying a car and you're just putting gas in it. And for people that really have the hardest concept to understand, assuming you're buying and remember, I want to make this point too. Leasing is only for new vehicles, right? So you can't lease used vehicles. So for anybody that's asking that question out there. But typically, I'll use a smaller number. A $20,000 loan typically would run you between $400 to $450 based on your credit, right? Assuming if you got good credit, you're at $400. Assuming if you got bad credit, you're at $450 or even higher based on 60 months, right? So when you're paying that payment based on a loan. That's
on a purchase.
On a purchase, that's correct.
On a purchase.
You're paying that payment based on a loan of a full $20,000. That's why your payment's $400. Well, I would ask customers a question: what if your payment was only based on $10,000? How much would the payment be? And it goes, well, this is kind of simple math. It's probably going to be $200 and some change. Well, absolutely. That's what's going to happen when you're leasing a vehicle. You're pretty much cutting it in half. So you're paying half now based on it, your payment being based on the $10,000 versus being based on the $20,000. And then at the end of the 3 years, if you like the vehicle, you pay the other half versus being a loan for the full 20 amount. I don't know if I made that make sense for some people out there, but that's the reason why legitimately you can have a smaller payment on a more expensive car leasing than what you would have on purchasing a vehicle. I don't know if you want
and I also think, it's just like buying a house in a lot of ways, because like when you buy a house, right, you have your mortgage and you have your payment and all that, but you have no idea what's going to happen to that house while you own it. The air conditioner might go bad. You might need a new roof. You might, there's all these unknown things that can happen. Whereas when you lease an apartment, for example, something breaks, you just call your landlord to come fix it.
Absolutely.
Your obligation is just to pay the rent. You don't have to pay to fix the air conditioning. And that's how it is on a lease of a car too. Like I had someone who bought a E-Class Mercedes-Benz from me one time, $56,000.
Wow.
And she was riding through Tampa. It floods in Tampa sometimes. The roads get wet. And she was taking her child to school and rode through a deep puddle, and the puddle ruined her entire electrical system. Wow. The car was totaled. This was 6 months after she bought it for $56,000.
Ooh.
The car at that time was worth $38,000.
Yeah.
6 months later.
That's typical.
And if she had leased it, she would have been able to walk away from it.
Clear and free.
Okay.
Absolutely.
She purchased it, and even worse, she paid cash.
Ooh. Oh.
So, people, I think that it's important to know, like, whether you're financing or whether you pay cash or whatever, you're going to be subject to the unknown. You don't know what's going to happen with that car. Like Wonnell said, if you get in an accident, if something happens, the value of that car can depreciate significantly, and you have no protection whatsoever.
Absolutely. And I'll tell you the flip side on that, when you say the worst thing is she paid cash, and that's not even the worst thing. The worst thing would be if she would have financed it. Right? Because and I don't know this person or her finances, but if she had $56,000 to pay cash, she might be okay versus the average consumer, right? But the average consumer, right, they finance it. So if you finance that car for $50,000 and now it's worth $30,000 and it got totaled and you didn't purchase gap insurance because when you went into the finance office, you felt like they was trying to upsell you, and now your payment's $700 and you don't want to pay the $720 and it costs $20 for gap. Now you're stuck with a $20,000 deficiency that you have to pay to the bank because the insurance company is not going to pay it. So guess what happens then? You can't, most times, especially if you're not in a super well-off financial position, you can't go out and get 2 car loans. Only certain people can get 2 car loans, right? So unfortunately, if you're single, if you're not married, right, and you just by yourself and you bought this car, now you can't get another car loan until you finish paying this $20,000 off. Well, guess what? You don't got $20,000 to pay off, right? Because guess what you did? You put $5,000 down at the dealership. You just did this. You're paying for college. You're paying for this. You're paying for that. So guess what happens now? That $20,000 gets rolled into your new car. So now that's $400 more payment that's going to be on top of whatever you was going to get.
If you can even get approved for that.
And that's crazy, though.
That's crazy.
And if you did pay that $600 or $700, you don't want to pay $1,000 now. So you was just in a Mercedes, but now you're going to have to go somewhere like, Nissan and get a Sentra just so you can afford to pay $800 on a Sentra. It absolutely makes no sense. But these are real things.
This is real. That's real. That happens all the time.
All the time. Like,
all the time.
People, and I've seen so many times, even when I was at Nissan, where people are paying $600 and $700 on a Sentra. And it's only because that's the only thing they can get. It's the only thing they can get rid of this negative equity. And they're in a situation where it's not a choice. It's not a choice. They have to do something. That's a very real thing. People get into accidents and they don't have gap insurance and they cannot get a car unless they get this loan paid off. They don't have the money to pay the loan off. So they have to find somebody that's willing to take this negative equity and put it in a car. And you can't go back out there and get that $600 car payment because now you're adding $400 to it. So that's what you got to do.
And I think part of the problem too is that when people go buy a car, and I say this all the time, too many people go in to buy a car and they're too focused on payment. I want my payment to be $300. like I always tell people, you need to research what is the price of the car you can afford, the interest rate. And then, if you can, if you can try to finance the car for 3 or 4 years, if your plan is to buy it and keep it forever or whatever, and you don't think leasing is right for you, then extending the payment for 6 or 7 years, which is what a lot of people do. Like I know people are going 84 months and stuff now too. Like you're gonna have negative equity.
Yeah.
Period. Point blank.
Period. And I tell people this on the flip side, because when you do short term, like 3 or 4 years, it costs. It's gonna cost you, right? So most times when people come into the dealership, the one thing they're trying to do is keep the minimum. Is they want to get the most car they can get for the lowest payment.
At the lowest payment. But that's the thing. Like I feel like people need to get off the whole payment thing.
Yes.
And I also feel like, and I tell this all the time, when you go into a dealership and you want a certain price, they're going to try to get you off. They're going to want to talk payment with you.
Yeah, that's right. and it matters because listen,
and I'm like, don't talk payment.
I would say yes and no, right? This is what I say, right? You have to figure out what your budget is, right? And you have to be willing to accept whatever car that can fit into your budget, right? When you walk into a dealership, if your
prudently, exactly.
If your budget is $300 a month, don't get sold by the glitz and glamours of the $450 payment, right? Because if your payment's $300, it ain't changed. The only thing that changed was your taste buds, right? When you tasted that $300 and you drove it, it ain't taste good. But when you drove the $450 payment, it tasted good. So now all of a sudden you're paying $150 over your budget. So, I would always say stick to your budget. For a lot of people out there, you do have to finance for 60 and 72 months. But I would say this, if you're going to finance for 60 or 72 months and you're like, I'm out on leasing, I'm going to finance for 60 or 72 months, commit to that like a marriage. It's to death do you part. It's in 3 years, you want to get something else. In 4 years, I want to get something else. It's if you sign that contract for 60 or 72 months, stay in that car.
Well, that's what a lot of people, I'm just going to do this for now. And in a couple of years, it's honestly, there's so many people that do not understand any of this because every day I see people who are like, yeah, I want to refinance my carpet. Oh, you can't refinance that.
Yeah.
No, you have negative. It's no refinance. And if you do refinance it, it's going to be worse than it is now.
Yes, it's going to be worse. So
that's and I don't think people understand that at all.
And I wanted to touch on this too while we're talking about leasing, because I didn't touch on this, and this is a big thing, is the miles. Everybody goes, oh, I don't want to be restricted to miles. Well, you have to understand, like, what you're going to pay in miles is very minimum to what you're going to pay in negative equity. So for instance,
you're going to pay it anyways. You're just paying it in a different way.
Yes. Yeah. And what I tell people is, if you go, for instance, right, let's use Ruth Chris and let's use Outback. I don't know if you're a big steak eater. I'm a big steak eater.
Yes, I love Ruth Chris.
Outback.
My favorite.
Outback has a phenomenal ribeye. They just do, right?
Oh,
hands
really?
down.
Okay.
If you're an Outback person,
I haven't been to Outback. I don't know.
Yeah, you know what I'm talking about with the ribeye from Outback. Right? But also too, Ruth Chris has a phenomenal ribeye as well, right?
Okay.
They both have phenomenal ribeyes, right? So it's the thing. At the end of the day, the similarities is one, they're both still beef. It's both still steak, right? It's the way it's prepared. You either want your steak medium well or you want it medium. It's still a steak. It doesn't change the texture of the beef. And that's kind of what I try to explain to people. You're still going to pay it regardless whether you're paying it in mileage penalties or you're paying it in negative equity. So a lot of the misconception is they don't want to be restricted on miles. Let's assume you drive 15,000 miles per year. If you do a 3-year lease based on 15,000 miles, that's 45,000 miles you have for the term of the lease. It doesn't matter if you do the first 40 in the first 2 years. It doesn't matter. Long as that last year you're only doing 5,000 miles, when you end that lease, if you're 45,000 miles or under, you never have to pay anything. If you're over, assuming you got a little froggy and you did 47,000, you went 2,000 miles over, like for BMW, it's 25 cents a mile. You owe BMW $500. Like, I would rather pay $500 anytime versus having to deal with $3,000 negative equity. And let's say for whatever reason, you thought you were going to drive a minimum miles, but you ended up getting excessive and you drove 60,000 miles on a 45,000 mile lease, then you have the option to buy and you're not even worrying about the miles, because what's the best used car to buy? Your own. You've been in it, you conditioned it, you know what's going on with it. So that's the input I would have on leasing. I don't know if you have any other questions on that.
And then, yes, I wanted you to touch on, because one of my favorite things when I was working at Mercedes-Benz and people would come in and they'd want to just pay cash for the car. And I would always say, that's not a good idea to pay cash for this car. You should do a one-pay lease, which is essentially like paying cash, but you're leasing it. And I want you to talk a little bit about why.
So for the cash customers out there, I always tell cash customers this, and it's really a term that's not really talked about a lot in the car business. One, when you're leasing a car in the car business, the dealership makes more money when you financing the car than leasing. Let's just put that out there. Let's just clear the air, right? If you finance the car, we're going to make more money than leasing. So you'll find a lot of dealerships that won't even offer leasing. They won't even talk about it because they're going to make the minimum amount of money when it comes to leasing versus financing, right? So when you have cash customers, right, a lot of dealers don't even understand how a one pay actually works. So they don't feel comfortable even discussing it with the customer, right? So what ends up happening is, and this is just in the shortest term for you to understand, a one pay is similar to a lease. If you're gonna finance a car and you're gonna make payments to a bank versus paying cash for the car, that's the same difference with a lease and a one pay. With a lease, you're gonna make payments, and with a one pay, you're just gonna pay cash. So you can assume and say it's a cash lease. So for instance, a customer will come in like the lady you was talking about that paid $56,000, right? So she goes into the dealership, she finds a car she wants, she strokes the check for $56,000, right? That money is gone. Typically, that person is no different from anybody else. In 3 years, they're gonna be right back at the dealership wanting to get another one, right? And so what a one pay is pretty much doing just like a lease, but paying in cash. So instead of paying writing a check for $56,000, okay, you would be writing a check for $28,000 and leaving with the same car. You wouldn't have any payments. It would be clear and free for the next 3 years. You wouldn't have a title, but at the end of the 3 years, you still have the option to pay that other half. But just in this case, for example purposes only, if she would have got into an accident, then she would have just been out of the $28,000 versus the $56,000. And depending on what the bank gave her, let's assume the bank said the car was worth, I think you said $35,000, right? Then she would have got a check back for that $7,000 or that $8,000, that portion, that difference of the portion. And that's what's so beneficial of the one pay. When I got this Chevy, Chevrolet is their lease penetration. When I say penetration, is how many people lease vehicles per vehicles they sell. So their lease penetration was somewhere around, nation average was around 7%. That's like 7% of Chevrolet customers lease vehicles. So when I got this Chevrolet of Delray, when I was running that store, I was big on leasing. I got the lease penetration up to like 37%, which was phenomenal because people just couldn't believe it. But where the area I was in, there was a lot of wealthy people, and they were coming in constantly paying cash for vehicles. So when I actually coined it the half off program, right? So I would ask them about the half off program. Have you ever heard about the half off program? They'd be like, they would laugh. They would think I would be joking and stuff. And they were like, what do you mean? I'm going to just give you half the money for this car? I'm like, yeah. You're going to write me a check for half the car. And then you take the car and the keys, right? So once I started explaining the concept, it was so mind blowing, especially to people that understand money, because if you have a business, you have expenses. So when you're going out and buying a car, that's taken away from money you can use for advertising. If you're an investor, you can invest that money for 3 years. You could possibly, if you're a smart investor, make that money where you really just use that car for free for the next few years. You know what I mean? So when I would explain to them, when they would come in and they're buying their Corvettes and their trucks, and a Corvette was 60 grand, 70 grand. Some of these trucks was 70 grand. And I say, listen, don't write me a check for 70 grand. Just write me a check for 35. and 40, and then keep the other 35 in the bank and do what you're going to do with it. And then in 3 years, if you decide you want that car, then you give me the other 35, then you give me the other 40. And it was mind blowing to them. And so, that's one of the things I would say to any cash customer. If you got to have a new car, and most people that can afford to buy a car cash want a new car, right? Don't give a dealership 40, 50, 60, $100,000. You go out here and you're getting these Mercedes for 100,000 and you're writing a check for it. No, write the check for 50 and then decide later on if that Mercedes, if you still want it, because more than likely in 3 years, you're going to want something else anyway. So I don't know if that explains it to you.
Absolutely. Also, if something happens, like technically it's the car's leased.
That's correct.
So you're not the owner. So let's say I'm a doctor, okay, and I'm wealthy.
Yes.
I'm driving this Mercedes-Benz on lease and something happens, okay? I'm just leasing that car. I don't own that car, okay? If you want to sue somebody, go sue Mercedes.
Yeah,
There's just so many reasons why leasing is so great. It's also like if you're buying the car for business use, leasing can be a really, really efficient way to get a huge tax write-off.
Absolutely.
You can, in certain cases, you can write off the entire lease.
Yeah.
Versus if you're financing, you have to write off the miles, or it has to be done in a different way. So I'm really a huge fan. So let me ask you another question, because one of the things that I admire about you so much is the career that you've built in the car business. And I know, like, one time when I was in the car business, I was recruiting and I had went to a job fair, and like I was trying to hire salespeople and everybody was just passing by the booth, and like people just didn't want to go work for a car dealership. And I couldn't understand why, because I'm at the car dealership, I'm seeing salespeople who are, 18 years old making 60,000 a year, 100,000, like it's crazy, right?
Yes.
So I would always be like, why is no one coming? And I think a lot of people looked at it like, oh, I don't want to be commission based. I want a steady paycheck. Yeah. Oh, so you're going to go make, $15 an hour steady instead of, the opportunity with no experience whatsoever to make upwards of 6 figures.
Yeah.
So talk to our viewers a little bit about the career opportunities, your career in particular, and also what you've seen in other people that you've mentored and hired and things like that. Like, what does the car business offer to someone who's looking for a career?
The car business offers a lot, right? The car business, I'll say this, when we're keeping it 1,000 honest, it offers a great, how can I say it? It offers a great way for you to financially provide for yourself and your family. One of the most awesome ways. I'll say that, right? But there's sacrifice. You give up a lot of time, right? And that's the one thing about the car business. You give up a lot of time. So for me, with me, I got into car business very early. I dropped out of high school, 10th grade, GED, didn't really make much of myself through there. I had a child early and I got into the car business looking for a way to make income. What I found was it was one of the best kept secrets that I could ever find. It's the best paid education because it taught me so many things, where I was able to communicate with people. I was able to understand contracts. I was able to understand loans. I was able to get out there and be able to communicate with people that was well past my education or money level. And learning
sales. Sales is one of the best skills anyone can have.
Absolutely. Sales is dominant from the top down because it shows you communication, how to talk to people, how to look for things, how to fact find, how to qualify, how to pay attention. One of the things I always joke with you about is like the psychology of it. Like, me being in this business for so long, like I read body language naturally. And that's what car business skills. And they actually, when you go to any training, they show you how to read body language. So just if I'm just out, I can read how somebody's feeling or what's about to happen with somebody because it's just their body language. It provided me, at 19, coming from a small town where the average median income was about 28,000 at the time. I was making $47,000 at 19 and a half, by the time I was 26, I was making well over $100,000. So, and it just kept going up from there. So the most time where people look at the commission side of it, it's, are you willing to bet on yourself? That's what it all boils down to. Because and I'm not saying that commission is better than hourly and salary is better than commission. It all depends on you, because some people don't want to bet on themselves. Some people want to continue to go with the norm and feel like, hey, I know if I go here and I do just this, I'm going to get paid just that. For me, I always felt like I want to get paid exactly what I'm worth. One thing I used to do early in my career in the car business was every time I got my check, we used to get our checks on the 10th. You probably remember that, your commission check, right? I would stand in the bathroom mirror with my check to my face and say, you are a product of your hard work, whether it was good or bad. And sometimes it would mess me up because I would be looking at that check and be like, man, I know I didn't work hard. So I would go out there and even work harder, and I got paid for that. One of the things is my son decided to follow my career and to go into the car business, and he's done well for himself. He's been able, just the year that he's been in the car business, and he's only 20 years old. He's about to be 21 in December. Just the year that he's been in the car business, his skill level and skill set is so far ahead of most people his age, and it comes to fact, when you're learning certain things, he's advising people that's 40 and 50 and 60 years old on what they should buy and what they shouldn't buy and how to spend their own money. And these are conversations that he would never be able to have or even have the confidence to have if he not went into the car business. So, the sales side of it is always going to be good. It's going to be good up and down. But I tell people, never be afraid of commission, because never be afraid of betting on yourself. If you work hard, you're going to get paid. And if you don't, then you don't. So I would say this: if you know and you only know you, if you tend to be a little lazy, don't go into commission. Don't go into a commission-based business. Stick with the hourly wage and just keep it moving,
But even then, like if you take a job, an hourly wage job, and you're lazy, you might get fired. Like there's no guarantee, no matter how you go. I think there's no guarantee in anything. So, I do, I know you're being nice about it. I'm all like, bet on yourself.
Yes, bet on yourself. And I
bet on yourself.
If you talk about the getting fired,
if you can,
When you talk about getting fired, I trust and believe me. I've been in the car business 20 years. If you come into that dealership and you're making sales and you're dominating and you're making I almost curse it. You're making a lot of money for that dealership. It ain't no way you getting fired for nothing. Okay, I mean, you're gonna have to hit somebody with a car, and then when you hit the person with the car, it's gonna have to be a hit and run. Like when you're bringing a certain amount of money to the dealership, and I wouldn't even say dealership. I would just say any
sales job.
When you are bringing a certain amount of money to that company, it is very, very hard for you to do anything to get fired, right?
And then you know what I love about it too, because the car business is partially where I got my start. Yeah. And I just feel like what you learn in sales in general, it leads into entrepreneurship.
Absolutely.
If you want to have side hustles, if you want to start your own business, whatever it is, those skills are needed. I've met so many people, like other financial planners, for example. They're very, very smart and they know their stuff from a financial planning standpoint, or doctors or lawyers, right? But then when they start their own practice, they can't sell.
Yeah.
So, you might know what you're talking about, but if you can't get clients and customers and stuff, and you can't, you're not confident when you communicate and speak, then, what can you can't really, in my opinion, you can't really excel at any job. I mean, I don't think so. That's my
You have to be able to speak. And it's kind of like what I told my son, when he was deciding to go into the car business. And, I honestly say, I instructed him not to at the time because, there's so much time and he's so young, but, he's seen what I've been able to do with where I come from and what I've been able to do with my career. He was inspired to do it. But I also told him it's the best paid education you're ever going to have. One, when you're a salesperson, you learn sales. Like that's a gift in itself that you can never, it's priceless. You can't put a price tag on learning the skill of sales, especially in the doggy dog world of the car business. You know, next, most salespeople get promoted to a finance manager, as I did. When you become a finance manager, now you're in your, you know, you're a sophomore in college learning finance. So now you have a finance degree. Most finance managers get promoted, just as I did, to a sales manager. And now,
what I did.
as you're a junior in college learning management, right? So you're learning the management aspect of it. And then after that, you know, you either go to a general sales manager or a GM. And once you become GM, you're getting paid to learn business, to run a business. So by the time you go through all those 4 stages over the course of years, like there's no stopping you. Like the sky's the limit. The sky's the limit, and it teaches you so much, and it's something that I've been thankful for. And you know, it got me out of my situation, and you know, with my little success story that I had. But you know, I would advise anybody that's not currently on a path of something greater, you know, especially, you know, if you're going to school to be a doctor or a lawyer, continue to do what you're doing, you know. But if you're kind of trying to think about, and even for people that's older, and you're like, hey, I've done a lot of things and I'm not sure, you know, what I want to do, and you're kind of in that middle, take a stab at the car business. Take a stab at the car business. I guarantee you won't regret it, especially if you're a go-getter. You won't regret it. You know, financially, you won't regret it. I tell most people, listen, the worst thing that's going to happen is you're going to double your income. And a lot of times, I'll tell you this, it doesn't matter how much income you make. You know, I know people in the car business that's salespeople. I have a buddy that's in Virginia Beach, Virginia, that works at a Nissan store that's making $250,000 a year selling cars.
I remember that one time I don't know if I was 24 or 26. I got a $21,000 paycheck in 1 month.
It was 2006.
It was amazing. It was like, and you know, and then it was like 13 to 15 grand a month, easy in my 20s.
Yeah,
you
that
know,
was the good old days.
24 years old. Like,
yeah, I remember.
What? I mean, it's incredible what you can do with sales. And I think that in any sales job,
Absolutely.
you know, in any sales job, there's no formal hours. Like if someone calls you on a Saturday or Sunday, like it's sales. You're trying to make that money, you're gonna work, you know. It's not like the hourly job where, okay, 9 to 5, now I'm going home and I have nothing else to do. It's never like that.
And, you know, for me, it was the flexibility too. It's like, you know, a lot of us in the car business, we say, you know, listen, I tell you this, I'm not gonna make it like it's all glitz and glamour. There's a lot of tough times in the car business, and it's a lot of times that you second guess yourself, should I even be doing this, you know? And the one thing I explained to someone the other day, I said, you know, we don't stay in the car business because of the money we make. Like, you know, we stay in the car business because of the potential of the money we could make. Like that potential keeps you there. Because when it's, let's be honest, when it's bad, it's real bad. Like, and you're like, you know, why in the hell am I doing this?
But Wonnell, you've always been in the car business.
Yes.
So you don't know what it's like on the other side. It's real bad when you don't even have that potential.
Exactly.
When you know all you're gonna be making is this.
Exactly.
And then you could get fired at any point and not have anything.
And so we would always say, you know, this, you know what, we want to get out of the car business. Got to get out of the car business. And I tried it 3 times over the 20 years. And man, when I got this, and I'm talking like I'm in the military, when I got to civilian life, I was like, hell no. I don't even know what civilian life is like, you know? I mean, honestly, you know, because at any given time,
I did it.
Yeah.
I mean, the sales knowledge is transferable to a lot of other industries.
Absolutely.
It really is. Once you know how to sell, and I think the car business is probably the best place to learn how to sell.
Oh, it's the
Once
best.
you know how to sell, you can start your own business. You can, any sales job, you could sell software. You could go work for Google, whatever.
Anything. Like you're primed. Like you're primed straight out of the oven like a Thanksgiving turkey. Like you're ready. Like it's nothing that's going to stop you. Your confidence level is at on cloud 9 to the roof.
Because that was the thing for me. I loved working in the car business. I just hated the hours. I didn't like working Saturdays and Sundays.
Yeah.
But like, if I'm in my 20s and I can do that, like I can make that kind of money, get that kind of, you know, background. I mean, I think it's great, but yeah, like you said, it's not all peachy because you do work all the time. You work a lot. So
you work a lot, and not, and to say this too, you're working all the time, but it's really, you're spending your time at the dealership. I would say that, because a lot of times at the dealership, you're not working, like a manual labor, or if you was on assembly line or something, there's a lot of downtime. So, you spend a lot of downtime prospecting, trying to get clients and things like that. So, it's not like you're outside sweating and just working and things like that. But, it's still, I say this, mental work sometimes is just as hard as physical work, because it's exhausting. Some nights I come home and I fall right on the couch and go to sleep. Like I'm just like that, from my mind running all day long and problem solving and trying to figure out things and help people and things like that. So it takes a toll on you. But I would advise anybody that doesn't have a direct career path and may not, want to go the college route, or didn't have a lot of education like I did, it's the perfect business. And they'll accept you full arms. If you can smile, you can talk, boom, open arms. Come see me. I'll hire you.
Right. So as we wrap up, where can people find you, first of all?
People can find me at BMW of Delray in Delray Beach, Florida. I've been there for a couple of years. So if you're looking for any type of vehicle, we also have a large amount of used car inventory. So it's an AutoNation store. So we share the inventory. So we have 365 stores as far as used vehicles that we can choose from. Unfortunately, for just brand new vehicles, we only sell BMWs. So you can always find me there, give me a call, we can put some deals together for you.
Sounds good. Anything else you want to leave our viewers with before we end?
No, the only thing I would just say is make sure you're just well informed before you walk into any dealership, and do your research. Like I said before, just touching back on it, definitely go to CarMax, get a CarMax appraisal. You have 7 days to turn your car in. That way you can actually get a good idea of what your car is worth. Don't use Kelley Blue Book to appraise your vehicle. You're going to come to the dealership and you're going to, probably either be embarrassed or you're going to be upset with what's going to happen. And really do your research on leasing and see if leasing is better for you. You'll be surprised when you start looking at the benefits of leasing.
Thank you so much, Wonnell.
Thank you. I appreciate it. All right. Sounds good. Bye-bye.